amphitheater a while ago, and then our colleagues from Savo C have just finished. So we're going to start starting our closing plenary session, and then immediately after we'll have the closing remarks for a summit, or rather a two-day summit. But like I keep reminding you, our summit still continues until the end of the week. It's been a wonderful time, and today evening we'll be having a good time with some of the exhibitors and the innovators. We'll start with a cocktail to kick off the official opening of the exhibition section. Will be on the ground floor. I believe that will be Lenana from tomorrow morning. And then on Friday, we'll definitely be letting you know tomorrow what will be happening on Friday. Very briefly, I have some lost and found. I have a beautiful other sessions that we've had. I'd like you to be ready to engage with the panelists. All right, we'll give you the open with the panelists. All right, we'll give you the open mic session so that you can engage with them. Like the other sessions have been, this will be 1 hour 15 minutes, and then we get to the closing remarks. All right, so please allow me to introduce our moderator for this session. She is the Vice President, Middle East and Africa for ASEAN. She oversees advisory engagements and the expansion of key partner relationships for this organization in the Middle East and Africa. She provides advice on digital financial inclusion, strategy, MSME finance, and other business-related areas for a wide range of the partners such as banks, fintechs, and development finance institutions. She has helped to design and roll out innovative solutions at the intersection of financial services and the real economy for undeserved customer groups, including women, smallholder farmers, and refugees. She brings 25 years of experience working across sub-Saharan Africa, the Middle East, and even the USA, collaborating with business leaders, policymakers, and donor agencies to lead and execute successful projects that solve big issues in areas such as financial inclusion and MSME growth. Ladies and gentlemen, please help me welcome on stage our moderator this afternoon, the Vice President, Middle East and Africa for ASEAN, Mrs. Raliat Sanmono. Welcome. Thank you so much. Just by way of mention, you may have your seat. Thank you. Just to mention, I know we were expecting a government official to be here with us, and that is the Principal Secretary for the Department of Micro, Small and Medium Enterprises in the Ministry of Cooperative, Micro, Small and Medium Enterprises, Madame Suzanne Mangeni. But as you all know, the country is in a period of mourning right now. The President, His Excellency Dr. William Samoei Ruto, a couple of hours ago, made an announcement and therefore suspended all assignments by the government officials, including himself, and therefore this is one of them. Madame Susan would have loved to be here with us, but don't worry, her duties will be carried out by somebody else right here at the plenary and also in closing remarks. So please bear with us because of that. Thank you. Please go ahead.
Thank you so much. And it's a pleasure to be here this afternoon, late afternoon. And without further ado, I think that was a much longer introduction than I had anticipated. So I'm going to jump right in and invite my other panelists to come up to the stage. David Berno, please join me. Laura Forsky, please join me. Curtis Musembi, as well as David Makaru, please join me on stage. And please a round of applause for the panelists. Thank you so much. Before we dive into things, and it's been a very intense, educative 2 days that's not ending anytime soon, as we heard. I'd love for you to take a minute each and just quickly introduce yourselves as well as your organizations, because I think we have a fantastic representation of different perspectives and lenses through your organizations, and I'd love the audience to get to know you a little better as we dive into the session. So please, David, if you'll start.
Thank you, moderator. Good afternoon all, and first of all, allow me to thank the organizer for being part of this amazing panel discussion, and also to congratulate with them, with the partner, with the participant for for this incredible conference. I'm very humbled to be here with you today. I'm David Berno, Italian by origin, and I do work for IFAD, the International Fund for Agricultural Development, in a team called FFR, Financing Facility for Remittances. We do work in the remittance and diaspora space, to support innovation alongside, price reduction and financial inclusion, specifically for rural outreach. Because we do believe that remittances and diaspora investment can support the developmental objective of the countries and the community. So, thank you.
Thank you very much, David. Laura?
Working? Yeah. Thank you very much. Another Italian, so we are two. And I'm the executive director of ADA. How many of you have had the opportunity to talk during these 3 days with a colleague of mine? Raise your hands. Oh, not so. Yeah, okay, that's fine. Okay, so I think that many of you had this opportunity. For the ones that didn't, ADA is an organization that is based in Luxembourg and has as main opportunity to provide technical assistance, investment advisory and knowledge management for inclusive financial initiatives in 3 main countries and regions that are Central America, Africa, and Southeast Asia.
Thank you. And David?
Good afternoon. My name is David Mukaru, CEO Caritas Microfinance Bank. Moderator, let me start by saying that I'm really excited to be here, significantly honored to be able to share with these honored delegations. Caritas Microfinance Bank is part of the Caritas family, and I have my family members.
In the sense of access to financial sector. That's very critical. And I think the human touch is very critical as well when you deploy a solution to, to onboard the community and also to make the uptake happening. Otherwise, I mean, they probably won't trust you, or they won't trust the solution that you are proposing. In this regard, in this context, what we saw that might be very relevant to consider as a must is digital financial literacy, which is empowering and connecting to the community you are supposed to serve. Let me give you an example. In Uganda, we support the implementation and the design first of digital financial literacy in rural areas through SACCOs. And the result that we experienced were enlightening. Because we saw more people saving more regularly, people using budgeting, to prioritize their savings, people repaying their credit, their loans more, regularly, and also fewer people applying for consumer loan. So they were more, mindful about, the importance of accessing a loan. So therefore, the question, how to make sustainable financial literacy, because I think a lot of people in the room might see financial literacy as a cost mainly, and not as an investment. While we believe that we need to, to shift the paradigm and understanding the way, as mentioned, to connect, to empower the community in order to, to keep listening them, because financial literacy is also a fantastic channel for listening, to understand the needs, and also to, to refine probably the solution that you wish to launch in the market. So I think this is an open question without a certain and given response. But I think as a community, we should take this as an important element to move ahead with a potential solution. Just to give you another example of how technology is providing value in our sector, we saw more and more remittance service providers and fintech using WhatsApp to channel remittances, since WhatsApp is the most used app in the world. And the beauty of this, solution is in many cases, or in a few cases, depending, the evidence source, the provider is also leveraging, stable coins for its convenience. But the consumer doesn't know about the technology because it doesn't care. They care of the convenience and the solution that you provide. So I think that is the element that we should consider for moving ahead in our conversation within our organization and with the partner. I'll stop here.
This is not a gap, yeah. And how it solves their problems. Ask you the same question, Curtis. Just share your thoughts about what you've heard around, balancing touch and tech, but really driving innovation to serve, the more vulnerable clients that we support.
Yes, it's undeniable in our day and age that we definitely have to embed digital in everything that we are doing, whether it's from the products, the way we deliver the service, how quickly we deliver it, that is not even in question. The only issue is that as responsible lenders and as responsible players, do we have enough guardrails to make sure even as we are in this space, we still stay very true to the mission. One of the challenges that we've actually seen, for instance, if I can give you an example, is in the design of a digital product. Definitely we build the algorithms, we make them very precise, and then those algorithms, we have a number of partners that have gone ahead and used them to give loans, especially to repeat customers that they have. The only question we need to keep asking over and over again is, how is this algorithm working? Is there a section of the demographic that is being excluded even as we use these algorithms? Are there human interventions at certain points that allow for human empathy? Because as much as we have the technology, as much as we believe in the tools that we are building, we definitely cannot take ourselves and the human element out of decision making. So we have to constantly audit and see, are there enough human touch points in this process that I am doing? Then in that way, the technology that we are rolling out is, we're just using it to amplify the work that we are doing, not that we are delegating our responsibility, so to speak, especially on the credit scoring bit of the business. Maybe just another example I can give you is we have a project in-house in EcoCredit that we are working with a number of partners, some of them represented here, where we are calling the end client survey. And this survey is just to get our partners on a large scale to gather data from their end customers and to hear in their own voice, how are things doing? What is their perception? There's what we think we are doing, there's the impact we think we are doing, but do the partners or the end users have the same view? And if you can collect this data and compare it over time, you can actually start seeing where are the gaps between what I promise that I do and what my end clients perceive. So then now you can, in investigating the reasons for that variance, that is where therein lies the opportunity. And we've seen new products being created. We've seen almost like a new voice, because it's a very systematic, scientific way of gathering this data. And I think it shows a lot of potential.
Thank you for that. And one of the other main topics, areas covered over the last 2 days has been around regulation, whether it's a hindrance or an enabler. And I think depending on what side of the fence you sit on, there are many perspectives. But a few key things that have been shared: the need to balance regulation so as not to stifle innovation, but also to ensure that the systems are not at risk and that the customers that we're serving are also well protected. And I think many of the panelists shared examples about how regulation has either helped in many instances, or some of the not so positive aspects of regulation where the institutions at the front line, the microfinance institutions, the small fintechs and rural financial institutions, that are most at risk of regulatory pressures are also the ones that are in the front line serving the most vulnerable clients. And so sometimes with regulation, we have a risk, or there might be a risk of marginalizing those who are already underserved and even more marginalized. And I want to turn it over to David from Caritas, because you are part of a microfinance institution that's, seen a lot of heavy regulation, in many cases good, and in some cases with unintended consequences. So maybe speak a little bit about your views on regulation.
Thank you very much. And I think regulation is a significantly wide topic, and there are many things you can be able to say about regulation. But in this context, is to just talk about the experience of Kenya. First and foremost, remember that the Microfinance Act in Kenya came into operation between 2006 when the act was passed, but it was operationalized around 2008, 2010 when majority of the microfinance banks were licensed by the Central Bank of Kenya. To date, only 14 microfinance banks have been licensed and are going through the life now of the act itself. I know many people will ask, why so few? What happened? Because that is the story of what Kenya has gone through. And when you reflect upon the performance of those 14 microfinance banks, you realize that there are some areas either the banks themselves or the regulator missed that need to be addressed, and we need to talk about them, especially in this kind of a forum. When you look at the statistics in this country, over the last 10 years, microfinance banks have been making losses, significant losses. And when you look at the impact in terms of branches and in terms of outreach, they've been lower and lower each year. So we'll say that the microfinance regulation has had, to some extent, negative impact in the growth of microfinance institutions in Kenya, and especially the microfinance banks, which I represent. Last year alone, only about three microfinance banks made a profit out of the 14 microfinance banks. But when you also look at the impact, you'll find that even the asset base and the outreach out there, quite a number of microfinance banks did not make a profit. Where I sit in Caritas, for the last 5 years, we've been profitable, we've been growing. We are currently the fastest growing microfinance bank in Kenya, and it's because of the kind of ecosystem that we are actually operating in. So in terms of the business model, the business approach, and the many issues around regulation, I think we will not say per se it's the regulation that has had issues, but there are quite a number of other emerging factors. For instance, when we talk about digitalization, most microfinance banks were a little bit slow in terms of adapting digitalization, and that was a significant challenge. Caritas was able to adapt digitalization very, very fast. To date, 99% of our transactions are actually on digital platform. So we were able to weather the challenges that the microfinance banks in Kenya are going through by quickly adapting to the digital era. Of course, we've also worked with the regulator to just be able to look at the issues that affect the microfinance banks in terms of regulation. But one of the lessons which we can be able to share with the people here and the regulators in this forum is let us ensure that regulation is not top down, from the regulator pushed down to the institutions on the ground, for instance, microfinance institutions. Let us ensure that the regulations are co-created. They are developed with the people in mind. let's ensure that the regulator also is able to supervise what kind of structure do they have in terms of regulation, and do they have the capability and the capacity, because those are the issues that when you're talking about regulation, you need to take into consideration. We now are into another era where Kenya has now passed what we call in the business laws, where the non-deposit taking financial institutions, microfinance institutions are now regulated. But we now are asking, can we be able to rethink, can we be able to discuss, can we be able to ensure that the environment is not the same as the microfinance bank environment, to be able to forestall the challenges that the banks have gone through. Thank you.
Thank you so much, David. And I think you touched on something that's critical, ensuring that regulation is co-created with other stakeholders, because a lot of the recurring theme we've heard over the last 2 days has been partnerships, collaboration, particularly between traditional financial institutions, fintechs, other kinds of actors and players, and regulation enabling and supporting that without stifling innovation. And maybe I'll invite you, David, to speak a little bit, because in your remittance work, maybe you can provide us with some tips about how you've engaged regulators and really created a more enabling environment to support the innovations that's required.
Sure, with pleasure. I would say that we saw, let's say, a pretty, let's say, collaborative approach from regulator by the end of the activity that we run. However, at the beginning, probably wasn't so easy to get them in the room. So. During the implementation of our initiative, Prime Africa, in 7 African countries, we did decide to establish a national remittance stakeholder network, basically platform to convey key stakeholders, among which regulators, to be part of the discussion, to be, knowledgeable and aware about, private sector pain points and, the opportunities. And then, throughout this conversation, we managed to do a few things that might be relevant and, useful for considerations, also for others here in the room. So, one aspect was precisely, aimed to tackle what you mentioned, that, sometimes the regulator create additional layer of constraints for vulnerable people. And we do know that by a fact, especially for rural dwellers, for rural population accessing remittances. As you might know, remittances can be seen as a very superficial way, as potential anti-money laundering, risk. While we're talking about payment of which on average are between $100 and $200. So. It must be, considered not, the channel for anti-money laundering. But, it's a common view that you need to kind of demystify, also with the regulators in some instances. And basically, through a collaboration with SEMF and consolidated data collection to granular, transactional base, in order to inform policy, to inform a private sector strategy, and of course, to inform their own colleagues running, the risk-based supervision. This is to close the intervention to say that it's a journey, as we do need to have a journey with our users and customers, with regulators, to allow them to be as part of our discussion, and to be guided how they wish to move things ahead. Because I had the luck to be in the front line in Kenya and Uganda, where the regulator is pretty progressive, where they have this test learning approach, while in other regions and countries they might be more conservative. Therefore, maybe in those circumstances you need to be more engaging with the regulators, to get their trust. Thanks.
Thank you so much. And I really like the points that you emphasized. I think it's a journey, so taking the regulators along with us on the journey. You mentioned something that's also critical, data-led advocacy. So you're building the demonstration models and gathering evidence to support advocacy, and I think that's really critical because oftentimes regulators don't know what they don't know, and we don't know either, so we have to build, the evidence to support that. And finally, I think capacity building for regulators, even as we think about capacity building for institutions and for our end clients. Before I move on to the next section, I want to ask the audience to get ready because we're getting closer to the interactive part. There's going to be a Slido QR code that will come up on the screen, and so you can share your thoughts in a few minutes, so get ready for that. Going back to what we've heard over the last 2 days, the third and by no means the least major thematic area has been financing the financiers, right? What are some of the new models that we're seeing? Where do the opportunities lie? Where are the gaps? Someone put it really well when they said resilient customers are enabled and supported by resilient institutions. So the institutions on the front line, the microfinance institutions, the banks, the fintechs, and so on, who are actually delivering these services and creating these innovative solutions, how are they being financed? We've heard a lot, again, over the last 2 days about what that looks like. I think one key thing that's coming through is having very clear and measurable outcomes. As we finance institutions, what are the expectations of the outcomes that we're thinking about? Is it just profit? Is it profit and impact? Is it, and what does that look like in clear, measurable metrics? And that's something to think about. One of the things we've heard over the last 2 days has also been, I think, a gap in some major areas, but particularly, I think, across the continent, we know that there's about a 2.4 trillion financing gap. So how do we close that gap? But also some optimistic thoughts about Africa financing Africa. And that's critical because it means then that we need to think about how we crowd in different kinds of finance and the kinds of actors that support those different models. So maybe I'll turn it over to Laura and ask you to share your thoughts on what we've heard over the last 2 days, particularly in related to the work that ADA is doing.
Yes, thank you. Thank you so much. I think that I will give the perspective of our work that is the one that an NGO that support, let's say, all the inclusive finance value chain. I think that for too many times, for too many years, we have worked in a fragmented way, and it's time to stop that. Looking at investors, are looking at the performances, financial and non-financial, sometimes not always, performances of the funds in which they invest, and the funds are looking at the performances of the investees, and the investees at the end as financial service providers has to look at their clients and be aware that they have to be profitable enough and structured enough and strong enough in order to get this funding. With the recent years, I think that all this complex and with facing complex problems is possible only when we have a collaborative approach and coordination of. And only, I think that an important key is to share this final purpose, to be aligned among the different actors of the value chain. And as I think that was Frank Aswani from the AVPA, stop talking about challenges, but talking about impact opportunities, because actually it was happening in the field. As I mentioned, monitoring evidence is crucial. Someone else in some panels said that we have to sell impact. And in a parallel session, there were as well a mention of to sell, we need to demonstrate and continuously monitoring what we do. And if in the past we were thinking about strengthening the core of the institution, the business model of the institution that I think is still relevant, but maybe we have to add to what we call the investment readiness, the impact management and measurement readiness, to have both together in order to really well perform and to be helped as well by the AI. We sit on tons of data that can be useful for really demonstrating that what we are producing in the field is really impactful. Another topic and another point is about scale. We have opportunities, so why don't we scale? Because it is necessary to get other sources of funding. We all know that development cooperation funding is going to be even more reduced. That what it's not just about USAID, I would say, it is all the other trends from the other countries that are going to reduce these resources, important resources for the sector. So we have to be creative enough, collaborative enough. We have to be to demonstrate that our impact is good. We have to sell it, and maybe we have as well to think about cookies and candies. It is candies for investors. Investors' mindset, as you all know, are very conservative, risk adverse, and if we want to bring private investors, if we want to bring pension funds, if we want to bring all the ones that contribute to the impact, we have to be aligned. They have to be aligned with the impact strategy that we proposed, but at the same time we have as well to demonstrate that we are not as riskier as they perceive, and provide some candies in terms of potential guarantees, incentive mechanism, de-risking mechanism that can help them in approaching and knowing better our sector and be on board on that. Just to mention some figures, overall, globally speaking, we are talking about more than 100 trillion on assets under management today. And I cannot imagine either what does it mean, 100 trillion, of which 25% is under the labeling of what we call the responsible and sustainable finance. It's a huge amount of money, and of which only 1 trillion is about impact investing. But impact investment is still a big amount of money, and only 100 billions are oriented to emerging countries. So there is a strong gap of this potential and this opportunity that can be reoriented towards emerging countries. But as you mentioned before, there is a lot in local resources that can be leveraged. And this can be done through collaborations. There are a lot of very nice initiatives that bring together the risking mechanism, that can bring international funders together with local availabilities like pension funds or like local private investors that are so relevant to improve the resources that are available.
Thank you so much. And I really, really love what you said. Stop talking about challenges and talk about impact opportunities instead. And I think that's certainly one call to action for all of us. Maybe, David, I'll ask you to chip in. I mean, you, as you said, Caritas Microfinance is local. You face a lot of challenges, but also emerge as a very strong and resilient institution. I'd like you to say a few points about some of these funding opportunities and how that's tying into the work that you do and the operations that Caritas does on the ground.
Thank you very much. From where we we're operating in Caritas. One had mentioned that Caritas is a regulated entity, is a deposit-taking microfinance bank. So our first source of funds is deposit mobilization. And because of the ecosystem we are operating in, we have sufficient deposits. We are able to fund our loan book to very, very well based on the strategies that we put on the ground. So for microfinance banks, that is an area that is still a struggle. When you look at the microfinance bank industry, they have more loans than deposits. So it means that they are unable to fund the loan book, which now provides a significant challenge and opportunity. But when you look at it from a different angle, in Kenya, the MSME market is a significant opportunity. We have a funding gap of about 2.5 trillion Kenya shillings. Here in Kenya, I'm talking about Kenya. So we have a significant funding gap in the MSME market. So it means that banks combined with microfinance institutions and microfinance banks are yet to achieve the desired outcome, to achieve funding the MSME market. When again you look at the banks in Kenya, all the investment, majority of the investment, let's put it that way, is actually geared towards government purpose. That we have banks with a liquidity of about 60%, 65% in Kenya, having invested in government papers. And yet, the MSME market has a funding gap of 2.5 trillion in Kenya. So you can see the mismatch. And that is the challenge that we actually have. And we need now to unlock that challenge by ensuring that we have significant MSME business models that are able to address the challenges that face our MSME. So it's not about that there are no resources and there is no demand. It's only that there is a mismatch between the people who have the resources and the people who require the resources. So there is a gap there that needs to be addressed. There is a mismatch there that needs to be addressed. From where we sit as a Caritas Microfinance Bank, the ecosystem, we've been able to map it very, very well. We work with the church very, very strongly, so our mobilization is around what is happening there together now with the rest of the community. We have a very strong grassroots community approach where we work with self-help groups that are in need of deposits, are in need of strong savings products, and we are able to provide them with strong savings product. And at the same time, really ensuring that the transaction platforms that are available are able to mobilize the resources to enable us to be able to lend. So in short, I'm saying that in Kenya and in Africa to an extent, we can be able to fund our own demand, our own gap. We only need to look deeply and to be able to listen to the customers and be able now to come up with very, very strong products that are client-driven and client-inclusive. Thank you.
Thank you so much, David. I like that. I think solving the mismatch by tapping into different sources of funding and creating the right vehicles and solutions to deploy that funding. We've come to the engaging part of the session. I'm going to turn it to you, the audience. If you had a crystal ball, or since we're in Africa, if you had to talk to your, as we say in my language, babalawo, or the witch doctor, and look out 5 years from now, what trends do you think are shaping inclusive finance that will really create the impact that we want to see over the next 5 years? So in one word, and you can vote up to 3 times, so you can have 3 different words, but I'd love for you, if you can put the Slido QR code on, please. I'd love for you to vote and tell us in one word, up to 3 times, what trends you think will really shape the course of inclusive finance over the next 5 years on the continent.
Thank you. Bonnie, the QR code, if you may. Thanks. And open for questions, yeah? Okay. Questions?
Any questions while we're waiting for the QR code? And remember, you can vote up to 3 times, so you can provide 3 different words if you're feeling particularly creative and inspired.
Shall we give them just probably about a minute to
Yes,
vote, and then,
yes.
and then we can get to the questions, yeah? Okay.
We're certainly starting to see a few things emerge. Another 20 seconds or so, and then we'll... As that's coming, maybe I'll ask you, certainly no surprises in some of the words that's coming through, but maybe do a quick fire round and ask my panelists, are there any words there that's surprising to you? Is there something that you expected to see that's not on there yet? Maybe Curtis, I'll start with you from the far end. Thoughts?
From just looking at the answers, I was hoping we'll have something on SME finance. And the reason I'm saying that, and just to echo from the opening plenary yesterday, the keynote address that the enemy is poverty, and we know that Africa, demographically speaking, we are a teenager, and we know rapid urbanization, we know the challenges of poverty, we know the challenges of unemployment. I'm a big believer in technology and what it can do, but we also have some proven models that, in my opinion, have not scaled fast enough. Because if we know that we really need to have some urgency, we really need to grow at an exponential rate, and we really need to create jobs for our people. So I'm hoping the innovation and the digitization that we are talking about is to amplify the call for us to really grow at a rapid rate. We cannot be leisurely around it. We have to definitely, all of us here, the MFIs, the investors in the room, the urgency of knowing the enemy is poverty and has to be fought with everything that we have. So I'm hoping the innovation and digitization is towards that.
Great, thank you so much for that. David?
Thank you very much. I think I'm seeing quite a number of issues which I expected. What I can see coming out very strongly is AI, digitalization, which I really expected will be on the board. What I am not seeing is partnerships, because partnerships are key. We can't do everything on our own. We have to really build bridges, build partnerships, and ensure that we deliver all what is on the board. You can't be able to do all this. You need partnerships. So for me, what I am not seeing coming out very strongly are partnerships.
Thank you. Laura?
It's quite hard for me because I cannot see there, so I'm trying to, but I think I don't see, what I don't see is And I'm surprised, regulation, you say regulation over there? I don't. And I think that talking about digitalization, i.e. and all that is about this technology is important we have learned a lot on the need to regulate this kind of tools in order to be inclusive, to remain inclusive as the purpose can be, and to avoid shift towards exclusion rather than inclusion. That is the first purpose of use this kind of technologies. And I absolutely agree with David. I don't see a lot of collaboration, partnership, yeah. But for the rest, I'm not surprised. And maybe something more about adaptation. There is climate change, I've seen resiliency, but even a little about adaptation is also another point that I've imagined to look at.
Thank you. And David?
Thank you. I think, in another probably, the words that we see cover somehow things, but if I need to say something that might be relevant to see more, evidently it's data, even though, digitalization might cover some aspect, but I think as mentioned earlier, data should be seen as a public goods to drive, policy, but also business strategy, and digitalization should be supportive to that end. And then I see, I don't know, maybe it's just a matter of coincidence that I saw insurance, but I don't see the savings, the credit, single, let's say, financial products that I think we have been speaking a lot during these days.
Thank you. And I think one thing that's surprising, well, not so much surprising me, but I'm glad it's showing up here, talking about youth finance, and there was something there also about cross-border finance, because I think those are two areas that speak a lot to the new kinds of customer segments that tend to be more vulnerable, or for whom the current systems and solutions are not quite appropriate. And then when it comes to cross-border finance and banking, I think that's also something else that we've seen, particularly when it comes to micro and small entrepreneurs, and how that can really unlock new kinds of livelihoods and solutions, and certainly resilience for them. So thank you very much to my audience for this. I'd like to move on to the next section. I do see that we have a little bit of time, so maybe if there are any burning questions, we can take one or two questions before I see a hand up here, and another one up in front. We can take those questions, and then I'll turn back to my panel.
Good afternoon. My name is Omoni Salami. We run an MFI in the northern part of Nigeria. So I was a bit surprised and encouraged to hear that somebody from a microfinance bank, I'm talking about Caritas, saying that they are able to mobilize enough deposits to be able to finance their loan. I'm pleasantly surprised to hear that, and I will please ask you to say more about that, as in how are you able to achieve that? Because from where I come from, unless you are fintech, which you are able to get payment, your payment system is basically fintech, and they don't do much of loan, or commercial bank, which does not do loan with the people we are financing. But typical microfinance bank are not able to compete when it comes to deposit mobilization. And if you say you are doing that, and as big as Caritas is, we will be grateful if you can share more of your strategy with us. Thank you.
Thank you, and we'll take one more, and then
my name is Pascal Mandaun from NCOT in Uganda. The session topic was very clear: adapting without drifting, reclaiming the client focus. I didn't hear that very well. I would have expected a situation where we look at the ecosystem and ask ourselves, is there anyone moving? Is there anybody going away from the mandate? For those of you who have been here for some time, you understand the genesis of the financial inclusion space, which originally used to be called microfinance. And I've been privileged to be here for some time. I've been in a greenfield environment. I've also been in the boardroom at a multinational level. But I would like to talk about the funding perspective, which I think there is some shifting that is taking place. The genesis was that microfinance came to fill a gap. And originally it was impact investing. And the word impact now, I think, is starting to be abused. Because how can we talk about impact investing when you are not talking about patient capital? What is impact investing if the funding we are talking about is at commercial terms? What is impact investing if the interests are just commercial like any other person? What is impact investing when the investors in it are actually looking for a return on commercial basis? So that is something the original ecosystem facilitators, when they came into this space, yes, it was about profit, but there was a lot to do with impact. So when you look at the first players in this sector, they were highly leveraged and supported to move from greenfield space to become what they used to condemn. That's what they are now, the boardroom, when you look at the spaces, the working environment, everything is now commercial. It's no longer targeting that person. In Uganda, I will give you an example. Because the funding space is no longer actually looking at impact, we have now created a new space for what we are calling money lenders. In every market, you'll find money lenders doing a lot of work, but damaging work at very high rates, terms which you cannot imagine, simply because we no longer have greenfield environments coming up. When you look at the funders in Uganda, all of them are targeting the same institutions. Those who qualify in that space, they are not even 7. Now, whom are you going to fund in the next 5-10 years if you cannot develop new institutions on the ground? I know them. Most of them, they have a lot of money. They have no one to give to because they are not investing in building new institutions. Yet the original old ones have now become banks. They are just exactly what we used to fight to try to convince to calm down. And we all agree that the big players, because of the weight of the operations and the requirements of performance, they cannot reach the real person on the ground. So the funding space, you have a lot of work to do to rethink your objectives. Otherwise, you are just facilitating the same thing that we were fighting 20 or 25 years ago. Thank you.
Thank you for the comment. Maybe I'll ask the investors to speak to that, but let's take the first question with David and Caritas, and then Laura and Curtis, if you want to say something about Mission Drift for the microfinance sector.
I think the question from the gentleman from Nigeria was how Caritas is able to mobilize deposit to fund its loan book. And I think I'd mentioned that our approach to banking is one of what we are talking about. It's about inclusion. And inclusion, financial inclusion is not about loans, which has been the biggest challenge we've had in the market. That credit, we are more credit-led than deposit-led. Caritas Microfinance Bank is deposit-led. We facilitate households to develop resilience. And for households to develop resilience, then they have to do it themselves. And they start by saving. So we've built a very strong savings foundation. we've come up with products and services that enable the households to save. We've come up with digital solutions to empower and ensure that our households are able to save from where they are, that they're able to open an account from where they are. They don't need to visit the largest town to be able to open an account. So we've digitalized all those processes. And to that extent, we've been able to ensure that the household is able to consume the total financial services. So we are savings-led, and we provide savings as an ultimate solution to resilience to the family. In terms of lending also, we ensure we align the lending to the savings. Because it's the same household that is saving that will come and borrow. Really, that matching is critical because you're also able to measure ability of a family to build resilience and to also build investment at the same time. So, lastly, and I can tell you this for free, it depends again on the ecosystem you are sitting on. You have to be very deliberate as a microfinance institution or a microfinance bank where you are sitting. Are you serving farmers? Are you serving an ecosystem like the one I'm serving, which is church-based? And once you understand the ecosystem you are serving, you have to come up with inclusive financial solutions to that specific ecosystem. You have to be able to provide solutions all the way from transaction services to loan, to savings services, to insurance services, and to also loan services. The four critical aspects are very, very critical. But the underlying approach we've been having is financial literacy. We are very deliberate in ensuring that in all the platforms we are serving, in the whole ecosystem we are serving, from an ethical perspective, we provide financial literacy to the household so that they're able to make decisions. They're able to know that they don't need to borrow all the time to solve a challenge. They can be able to save and be able to solve the same challenge. So there is a lot of financial literacy that is around the ethical financial services ecosystem.
Thank you so much. And very briefly, Laura and Curtis, just a quick response to the comments.
Thank you very much for your question, by the way. 20 years ago, I remember that a paper was issued by Microrate, I think at that time, calling the microfinance the first asset class for impact investment 20 years ago. So we are always been doing impact in microfinance, in my point of view, because there is the intention of being a double bottom line organization, social and economic. What we are seeing today is there are other actors and players in the financial space that are talking about impact finance. And why we don't keep this space and this importance. So this is why I continuously talk about microfinance, inclusive finance are actually impact finance at the end. As other new actors or new initiatives as well, they can head to the impact finance space, but they are actually. What we have to avoid, and this was in my previous, what I was saying previously, is the fact that we have to build on the evidence, because if we just have the intention to doing good, is not enough today. We have to really demonstrate that, because the investors, even the impact investor and the patient investors, ask that to us. And the regulator, I'm from Europe, and the regulator asked that to us. So it's a chain of reporting and monitoring that can help in doing better and monitor our impact performances as well as our financial performances. And about the commercial returns, what I had not the time to say before is the role of the catalytic impact the catalytic capital, sorry. All the capital that can be provided at a higher risk and a lower return. And even that can be considered as a possibility to lose this kind of capital, so very close to grants. And for this kind of capital, we have philanthropy organization, donors, foundations, and even public sector that can play a role that is essential in order to build new ways of funding an impact sector.
Thank you. And Curtis, your thoughts on that? And as you're doing that, maybe we also go to the question on your priorities as Oikocredit, especially as you think about the trends shaping inclusive finance.
Okay. I feel your frustration, Pascal. And I guess it just stems from we ought to do more. All of us, the microfinance institutions, other players, impact investors, because again, going back to what I was speaking about, the need is there, the need is huge, it is growing, and we cannot afford to have, small step increases in the right direction. We have to make big strides. What I have to re-emphasize is that we are still in impact investing. We are still working with all the players that are here and all that are represented here. And it's because microfinance is the method of delivery that seems to be changing, but the needs are the same. The issue is still poverty, the issue is still climate resilience, the issue is still lack of collateral that can support rural communities to get finance. So we are only changing the methods, but definitely the needs remain the same, and we just have to attack them from new angles. And maybe one of the things that we need to continue doing, and as Oikocredit we're already doing it, is just on the capacity building, because we grow when you grow. So if we can give you all the support and all the capacity that you need, then you grow times 2 in Uganda, for instance. Definitely I know next year you'll come and tell me the facility we have, can we double it? So it's a matter of all of us putting all hands on deck and ask ourselves, how can we have our institutions growing at 2x every 4 years, for instance? And if we can do that, we will still keep the funding going where it's needed the most. And just to use again Oikocredit as an example, for 50 years, we've not moved an inch from saying, for us to work with you, you have to demonstrate how you're working with low-income people, or how you're working with smallholder farmers, or how you're working with SMEs, because SMEs create jobs. Those 3 questions, when I joined Oikocredit 7 years ago, I found them there. When I did a due diligence 1 month ago, I asked the very same questions. How are you working with low-income people? So it's just a matter of let's keep working together. If there are any barriers, I understand the question on affordability, and it keeps lingering in the air. But it's something that together, of course, there's the way the market is structured, but I'm sure solutions can be found. One of the mantras we have, for instance, at Oikocredit is that we are a for-profit organization, but not for profit maximization, which means if we are having a discussion, I'm not asking what is the highest amount of interest I can extract from you. We're just talking about what is a fair rate that allows Oikocredit to exist, and a fair rate that allows you to deploy this funding sustainably to where it's needed most. So your whole hope is not lost, but I'm sure, Pascal, we can probably grab something during the cocktail and find where the shoe is pinching. Probably we've missed a thing or two.
Thank you. I love that. And David, I'll turn to you. Just looking out 5 years from now, what are the priorities that you will be working on? Again, thinking about some of these trends that shape in the space.
Yes, thank you. I think we'll keep working on the area of data as a public goods for the reasons I mentioned earlier. I think we should be data-driven beyond being user-driven to shape our actions. And also probably it's a part of the mandate of development partner to work in this kind of macro element that might be relevant for all the actors in the ecosystem. Talking about the ecosystem, we wish to still support to build an inclusive ecosystem, especially for rural people. I mean, as you know, IFAD mandate is in basically rural transformation. So that is the core mandate, and of course, access to finance. It's so important, so critical for all the population that live in the rural areas. And as part of my team, we will definitely work to try to innovate with partnership on how remittance can bundle adjacent products like savings, credit, and insurance.
Thank you. And Laura?
For us, it's really remaining focused on vulnerable population, partnering with the local partner of the entire local economic system in order to strengthen the capacity to provide them with financial and non-financial solutions. In the meanwhile, raising awareness of new players in the financial space in order to let them know that impact can be good and profitable, and bring new resources in this context. And being as well creative, building new solutions together with the new players and the local partner in order to improve our work.
Thank you. David, last but not the least, for Caritas, priorities?
For us is to continue providing ethical financial solutions to the household because it is critical. It is to ensure that we as a service provider enhance the resilience of the household, ensure that in terms of turbulence, in terms of challenges, the household is able to withstand the shock. We want to continue looking at our clients from a long-term perspective, that we are actually partners. The clients are with us, and we are walking the journey together to ensure that we move in the right direction. We want to continue to provide resilience-based services like financial literacy, not just credit. We also want to continue really providing them with savings, insurance services for them to be able to be more resilient, and to also continue being client-centered and also more flexible as we grow the community of Kenya. Thank you.
Thank you so much. Thank you so much to my panelists. Please, a big round of applause for my panel. They have been amazing. And you, my audience, have been amazing and patient. I know it's been a long day. Thank you for sticking with us. We've heard a lot all the last 2 days and also in the last hour and 15 minutes. And just to reiterate and summarize, we are trying to build resilient households, all of us here in some way, shape, or form. And to do that, we need more dynamic and inclusive and understanding, I should say, regulatory environments. We need better solutions that fit, and we need to leverage in the appropriate and balanced ways the right types of digital technologies, human capital, to create the innovative solutions, whether financial and non-financial, to support those resilient livelihoods that we're trying to create. And I hope that when we meet back in another 2 years for SAM, we'll be talking about scale, we'll be talking about successful partnerships, and we'll be talking about how we've reduced really the 2 billion currently underserved primarily rural and women customers to pretty much nothing. Thank you so much and have a great rest of your day. The conversation doesn't end here, so I hope you take advantage of the many different sessions available over the next few days, and also reach out to my panelists as necessary. So thank you and have a good rest of your day.
Thank you, thank you, thank you. Ladies and gentlemen, a warm round of applause for our moderator today, Madam Vice President. Thank you so much. And our panelists, thank you so much. That was really, really wonderful. You've enjoyed, right? This was a good one, isn't it? Yeah, truly, truly the closing plenary session. And on the screens, as you can see, our graphic facilitator. May you please stand up, Mr. Geoffrey? Thank you so much. Can we applaud Mr. Geoffrey? This is a wonderful impression of what we've captured. May I invite you to take your seats? All right, thank you so much. All right, so there we go. Listen fast, co-design later, even when it comes to matters digital solutions. The way you build algorithm and matters, I like that picture in the middle, right? Yeah? Looks like a picture I was talking about earlier yesterday. Remember, permanent friends today, discussing, right? Not leaving anybody behind, right? Remember the slang I gave you yesterday? Wakudumu, tutadumu. I want you to say it again. Wakudumu, tafadhali, all right? Wherever you go, please do not forget this, all right? Regulation, the consequences, protection versus marginalization, insurance, and basically everything he's been able to capture through his impression as an artist. I'd like you to take a picture of this. You can take it home with you. Use it as a screensaver until the next time we meet again, which is be in 2 years, okay? So we're coming towards the end of our seminar here at Tsavo, but this definitely doesn't mean the end of our Africa Inclusive Finance Week. We'll be calling our speakers shortly after to come and do that for us. It won't be too many speakers, there'll just be 2. But I'd like to do something interesting with all of you. I haven't seen any of you dancing today. And I'm meant to believe that some of you are very good dancers. So which song should you dance to? I mean, this is like closing day for school, right? Which song? From where? From Ethiopia? Huh? Which one? Don't be shy. You won't be the one dancing alone. I'll dance with you. Which song should we do? Anywhere? Which one? I know she got shocked. But anyway, I don't want you to dance. Instead, I want you to stand up. We'll do something very simple, all right? Very, very simple. Just follow my instructions. Just all of you stand up, all right? Energetic. You can put the, all right, yeah, you can listen to the translation gadgets if you may, all right? But I'd like you to appreciate all of us, okay? In order to do that, please follow my instruction. There'll be 1 clap for the host, Nairobi, Kenya, okay? You get me? 1 clap, all right? And then be 2 claps for you, our wonderful delegates, all right? Are we together up to there? 1 clap for the host, Nairobi, Kenya. 2 claps for the... Wait. We'll do it together. If we get it wrong, we'll do it until evening, until tomorrow. We have to get it right, okay? Then 3 for our wonderful panelists. Not just these ones, but all those who've been with us since yesterday. Haven't they been wonderful? You all agree? Yeah? So 3 will be for our participants, or panelists rather. 4 will be for our wonderful moderators. Don't you agree they did a wonderful job, yeah? 4 will be for our moderators. And then 5, last, will be for our sponsors and our partners, because without them, this would not have been possible. Okay, shall we go? Can you hear me? Can you hear me? Okay, so let's warm them. Warm, rub them, let them get hot. 1. No. If you do it, we'll do it again until we get it right. Okay? All right. So this is for the host, Nairobi, Kenya. All right? Let's go. 1. Who's delaying? We're in class. Okay, one more time. All right, one more time. Let's go. For the host. Let's go. Fantastic. Okay, let's go. For the participants. How many? 2. For the participants. Let's go. For the participants. Hey, you went 3. Jesus. Okay, let's do it again. All right. For the participants. Let's get it right. Okay? Let's get it right. For the participants. Thank you. Let's go for the panelists. 3 times, yeah? For the panelists. Let's go. Hey, we went 4. No, 3. For the panelists. 3. Let's go. Thank you. For the moderators. All right? Let's rub. Let's go. Fantastic. Who took us to 5? Wait a minute, let's do it again. Okay. All right, for the moderators. Let's go. Thank you. Now for the sponsors, our partners today. All right? Let's go, let's go, let's go. Let's go. Fantastic. Now we do this one more time without mistake and we finish. All right? Let's go. For the host, Kenya. For the participants. For the panelists. For the moderators. For the sponsors. Please be seated. Thank you very much. Appreciate it. All right. Last but not least, I'd like to congratulate all of you delegates, all right? And by those so doing, let me just use 2 minutes, all right, to thank all the delegates from all the countries here present, all right? Let me start by thanking Bangladesh, delegates from Bangladesh, Belgium, Benin, Bouvet Island, Burkina Faso, Burundi, Cameroon, Canada, Central African Republic, Chad, Colombia, Democratic Republic of Congo, don't get tired, Cote d'Ivoire, Denmark, El Salvador, Ethiopia, France, Gabon, Georgia, Germany, Ghana, Guinea, India, Italy, Japan, the host Kenya, Luxembourg, Macedonia, Madagascar, Malawi, Mali, Mauritania, Mauritius, Mexico, Mozambique, the Netherlands, Niger, Nigeria, Norway, Peru, Philippines, Poland, Rwanda, Senegal, Sierra Leone, South Africa, South Sudan, Spain, Sudan, Sweden, Switzerland, United Republic of Tanzania, Togo, Tunisia, Uganda, United Arab Emirates, United Kingdom, United States of America, Zambia, and last but not least, Zimbabwe. Where are you? Thank you. And I hope you show up at the next venue, just the same number, if not bigger, right? Promise that, all right? We'll be told where the next venue will be. In order to close our official sessions from yesterday to today, please allow me to invite one of the board members of our main sponsors, which is Amphi-K. I'd like to invite on stage Mr. Curtis Musembi, who is the Kenya Investment Fund, one of the directors there, Oiko Credit, and who also doubles up as a board member of Amphi-Kenya. A warm round of applause for him, please.
It's me again. Is this saying that I used to hear a long time ago that the government is you and me? I did know that that prophecy will manifest today, so I have to speak on behalf of the government today. Allow me to read the speech by the Honorable Susan Mangeni, who is the Principal Secretary, State Department of Micro, Small and Medium Enterprises. Delegates, partners, ladies and gentlemen, as we draw the curtain on this historic two-day African Inclusive Finance Week 2025 dialogue, I stand before you deeply inspired by the energy, insight, and collective determination that has defined the two-day discussions. Kenya is proud to have hosted this momentous gathering, a platform where Africa has spoken to the urgent need to build inclusive, innovative, and sustainable financial ecosystem that leave no one behind. We have witnessed the power of collaboration between governments, investors, development partners, and practitioners, all united by a common goal to make finance an inclusive tool of empowerment, equity, and transformation. The conversation held in this two-day forum has reaffirmed that inclusive finance is all about opportunity and dignity. We have unpacked challenges, but more importantly, surfaced solutions from digital finance, innovations, policy harmonization, consumer protection, collaboration, capital, and capital mobilization. This dialogue has shown that Africa's inclusive journey is no longer theoretical, It is still alive, practical, and still gaining momentum. And now, distinguished ladies and gentlemen, allow me once again to convey our deepest appreciation to all the partners, collaborators whose commitment and partnership have made this historic gathering a remarkable success. On behalf of the government and the people of Kenya, I extend special gratitude to the government of Luxembourg for the visionary leadership and unwavering dedication to advancing inclusive and responsible finance. The long-standing bilateral cooperation and friendship between our two nations stands as a testament to the power of shared vision and mutual respect. We look forward to deepening this partnership. To ADA, your dedication to technical cooperation, innovation, and capacity building in Africa continues to transform communities and institutions. We thank you. To Maine, we recognize your continental leadership in building a strong microfinance industry and advancing Africa's collective voice in global development. To Amphi Kenya, we commend your effort and leadership in ensuring that this week was not just an event, but a continental movement for inclusive finance. Dear ladies and gentlemen, the gathering here of over 63 countries at this iconic Kenya International Convention Center is indeed historical, and to every delegate, every speaker, every sponsor, every partner, thank you. On behalf of the people of Kenya, we thank you for your friendship. May your journey back home be safe, and the spirit and warmth of Nairobi travel with you wherever you go. God bless you. God bless Africa.
Thank you so much, Mr. Curtis. And now finally, ladies and gentlemen, please allow me to bring to the stage Madame Laura Foshi, the Executive Director, ADA, for the final and closing remarks. Please welcome her with a round, warm applause.
It's me again. What a conference. I think that what we have demonstrated is that we are resilient in organizing these 2 days, isn't it? Thank you for your adaptation capacity of these 2 days. Together with this 1,100 participants, I think that this sum has been a real and huge success. We had a lot of last-minute changes, as I mentioned, shifting schedules, but this is about building knowledge. And thank you very much for your capacity to adapt. We gather a lot of discussion and still ongoing. This remain, you can save your contacts and use them for the next years to come as well. We have the same application for the previous sums, so we can continuously collect and add and keep building. With that, I would like to thank everyone who contributed to bringing the SAM 2025 to Nairobi. First of all, the government of Kenya. Thank you for your warm welcome and the steadfast support. The government of Luxembourg, thank you for your long-standing and generous commitment to inclusive finance that's still continuing, and for supporting the sector year after year. Our sponsor, we are deeply grateful. Without them, this will not happen. Let me acknowledge you one by one. The silver sponsor, we have EIB, Capital Banking Solutions, CIF, Infine, Proparco AFD, SDC, SCBF. Bronze sponsor, Arendt, BFT, KGSV, Graft Silicon, FPM, ASBL, Fondation Grameen Crédit Agricole, CD Soluti, Le Snoop, Vision Fund. As partners, Action, African Development Bank, ADFI, ARE, ANDE, Cerise SPTF, FinDev, Finequity, FIT, Frankfurt School, Kenya Airways, Loft, Microsafe Consulting. Let me thank as well the organizer and the teams. The teams of MFK, please, if you can stand. There's no one from MFK. Thank you very much. The team of ADA, please stand. The local technical partners that did a big job behind the scene. Please. Thank you. And production crews, interpreters, and all the volunteers, you worked tirelessly behind the scenes to make this possible. Thank you very much. But for the very 6 applause that we are going to do, they are dedicated to our extraordinary master of ceremonies, that Nimrud Tabu. Thank you very much. But I would like to make the same exercise. I'm not so good as you, absolutely not. But please, 6 times, because we stopped at 5, but he deserved the 6th one. 1, 2, 3. And we can continue overall. Thank you so much. Such a great job. So, as we close this conference, not the week, let's carry forward what defines the sum. Sharing experiences, gaining new insights and knowledge, building new businesses, relationships. This will start tomorrow, moreover. Gaining new insights, meeting new friends, strengthening collaboration within African and between African and the rest of the world. All to make the inclusive finance sector even more inclusive, resilient, innovative, and client-focused. To support people on their journey toward empowerment and to help build impactful economies that benefit all their members. Thank you all and see you soon in the next edition of the SAM in 2027. Thank you very much.
Thank you once again. Let's give it up for Madame Laura. Thank you so much for a wonderful speech. And thank you so much. You've been so wonderful, and I appreciate everything. Made it so easy to work with you and all of you. I really appreciate. Wish you could do this again and again and again, and I hope we get the chance to do that. Thank you once again. Just very briefly before I let you go, today evening will be the kickoff, the cocktail kickoff for the Innovators Village as well as the Investor Fair, which will begin officially tomorrow morning. So you're all encouraged to still be here with us. We will not use this room again. Instead, we will use the lower rooms. That is Aberdare and Lenana. This will be for the Innovators Village. You're encouraged to go and have a chat with them. The exhibitors will be there. They're setting up right now, but we'll start off with a cocktail immediately we leave this room. The Investor Fair will take place tomorrow at Savo C. It's the smaller room next to Savo A and B, all right? And then tomorrow evening, there'll be a closing cocktail reception, which will start at 6 p.m., but that will take place here at Savo A and B. So the only time we'll come here is tomorrow evening, not in the morning, all right? So in the morning when you come in, as usual, I think you'll get your badges checked, and then you go straight into the Innovators Village, engage with the innovators, the exhibitors. They'd really love to share with you the same way we've shared together here today. And then for those who will be attending the Investor Fair, you're encouraged to go to Savo C. And then we'll meet later on tomorrow evening. Thank you once again. I wish I could add some more, but having said that, we've come to the end of today. We'll see you again tomorrow. Have a lovely evening, and God bless you. Take care of yourself. Bye-bye.